I am AI avatar of CA Ratan Mundra. From the 1st of April 2026, India's TDS and TCS compliance framework will shift to a new payment code based structure under the Income Tax Act 2025. This is one of the biggest operational tax changes for businesses, accountants, consultants, and finance teams across the country. Earlier, businesses mainly relied on section references like 194C, 194J, and 194I. But now, organizations must identify transactions correctly and map them with the appropriate numeric payment code for tax payment and return filing. Under the earlier framework, accountants remembered TDS sections and applied them during compliance reporting. The new framework changes this completely by introducing transaction-based numeric payment codes for challans and return filing. Businesses must now follow a new process: identify the transaction, choose the correct category, apply the correct payment code, deposit the tax, and file returns accurately. This means ERP systems and accounting workflows must also be updated. Many businesses think correct tax deduction alone is enough. However, under the new framework, even if the tax amount is correct, selecting the wrong payment code can create mismatch issues during return processing. Wrong classification may result in defective returns, delayed deductee credit, vendor disputes, and additional correction filings. Businesses therefore need stronger verification and reconciliation systems before filing challans and returns. The new structure creates separate payment codes for contractors, technical services, professional services, rent, and interest transactions. Businesses must now identify the exact nature of payment before selecting the correct code. For example, contractor payments to individuals or HUFs may differ from payments made to companies or other entities. Similarly, machinery rent and building rent may also require separate classification during reporting. The new framework also introduces separate payment categories for virtual digital assets, online gaming winnings, e-commerce transactions, and business perquisites. This reflects the growing focus on digital economy compliance. Partnership firms and LLPs must also pay attention because partner remuneration and interest payments now require proper TDS tracking and reporting. Businesses must therefore strengthen transaction-level classification systems immediately. The TCS framework now separately identifies luxury and high-value product categories such as watches, handbags, collectibles, yachts, and premium goods. Retailers and importers must therefore update billing software and product masters carefully. Separate codes are also introduced for overseas remittances and foreign tour packages. Banks, travel operators, and forex businesses must capture customer purpose details accurately to avoid reporting mismatches. The older TDS and PCS framework depended heavily on section memory and traditional accounting practices. The new system focuses more on structured classification and transaction-wise reporting accuracy. Businesses must now create mapping sheets linking old section references with new payment codes. Without proper transition planning, confusion during the initial months of FY 2026-27 is highly likely. This transition will affect companies, banks, NBFCs, LLPs, e-commerce operators, travel businesses, and luxury retailers. Every business that deducts or collects tax must update internal systems and compliance workflows. Finance teams, ERP developers, auditors, and tax consultants must work together to ensure smooth implementation. Businesses that delay preparation may face reconciliation issues and operational disruption later. Businesses should immediately prepare master mapping sheets containing old sections, new payment codes, rates, thresholds, and transaction categories. ERP systems and accounting software should also be updated for code-wise reporting. Organizations should train accounting and branch teams with practical examples and introduce meeker checker verification for challan preparation. Monthly reconciliation between ledgers, challans, and returns should also become mandatory. The new TDS and TCS Payment Code system represents a major compliance transformation for Indian businesses. The biggest challenge will not only be tax deduction, but also correct transaction classification and reporting accuracy. Businesses that prepare early by updating systems, training staff, and strengthening reconciliation processes will be able to transition smoothly into the new compliance framework and reduce future mismatch risks. Moon Sales and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence. A pioneer in establishing SEZ and IFSC units within GIFT City and India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management. Renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BAT, and ancillary regulations and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA. Comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network, scan the QR codes below to stay connected with us.